The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
A very special guest at the break, Dr. Al Larson from Money Tide will be our guest. One of the smartest dudes I've ever met, and I think you'll enjoy his presentation. Dr. Al and I are the same age and only a few hundred IQ points apart. All right, let's take a look at the DAX. As you can see here, we've been in this really tight trading range for the last 10 days with a slightward upward bias. We're seeing pretty much the same thing. We had a beautiful Gartley yesterday down at the 78% level in the FTSE, and then it had a pretty good rally. The reason why the FTSE's strengthening is due to the fact that these negotiations for Brexit supposedly are giving a sign of a potential major change over there. But I don't know anything about that stuff, but at least that's what they're talking about. We need to do a little housekeeping here, folks, because we've talked about a few trades here that we really ought to pay a little bit of attention to. We'll look at this crude oil first. This was the one that we were looking at coming into this the other day on Monday, and so we can see here that we did get up to this 58.50 level. That was the 78% level off of 0.3. And then, of course, then we had a really, really good move down. I just wanted to walk through the pattern with you just so that you can see that it was following what we expected to happen. So here it is spread out over a several-day period, so you can see the pattern forming real easily. Yesterday's high was right up at that 58.50 level. The high was 58, I believe 59. And then we came right down yesterday and stopped exactly, to the tick, at the exact 61% retracement, which all it did was take out the low of the previous day by 2 pips. And then it moved. A pip, someone's asked a question, a difference between a pip and a tick is the same thing. PIP is the way they refer to it in foreign exchange. A PIP means, PIP means percentage in price, and that's all it means. It's a same difference. So anyway, you'll see that it stopped right there at that 61% retracement was at 56.85, and so far today we're getting close to the 61% retracement, which is up there at the 5,800. If we get above the 58.50 again, you're looking at a big ABCD that's going to take this back to $60 a barrel, which I believe is the goal that the people at OPEC are talking about. Now, just because they're talking about it, doesn't mean that you're going to get there for sure. Now, another one that we were watching very closely was the feeder cattle market, even though it was not one of the things that we follow that often. But you'll notice here, and I just want to talk to you a little bit about risk control here. We were looking at this ABCD forming yesterday at the 144 level. We've rallied 3 full points from that level, folks, which is a little more than $1,300 in the cattle. If you're in that, you got to put your stop at break even. And the reason for that is your original risk on this was about 1 cent, which is around $440. But now that you're up, 3 handles from there, your risk is now the $1,300 that you've made plus the $400 that you risked. That's just doesn't make any sense. So what you should do is to put your stop at break even at the very worst, and then you can go from look at it again. But if it keeps going, then you let it rip. But if it you don't want to increase your risk. That's the last thing that you want to do. So watch this very closely. We had the same pattern forming in the February cattle. That's also moved several cents in your favor. So the key is to get your stop to your break-even point, because it's all about risk control. It's not about how much money you make, it's how much money you've got at risk, and you don't want to have too much money at risk. That's the real key, to be looking at some of these, as near as the way I look at it. So we'll see what's going on. The stock market had virtually no reaction to the election that went on in Alabama. And that'll be past tense in about another 20 minutes. The media will go on to something else, whatever that happens to be, and then we'll see what's going on. We've had a question about Tesla. I wanted to bring this to your attention here because this is what we were watching in Tesla yesterday, right before the open. They came out saying they'd sold a bunch of trucks to PepsiCo, and the market immediately went above the 330 level. That was that 1.618 pattern. And once it does that, folks, that means it's in never, never land. You never know where it's going to go, or you never know where it's going to stop. And we're trading at around the 341 level right now. The 61% retracement of that whole move down takes it up to about 350 in Tesla. But again, it's going to be a little higher this morning, so there's no reason to stand in front of it. Wait for that secondary pattern to fill, and you'd be a whole lot better than that. So remind yourself that it's all about risk control. It's not about how much money you make. It's about how much money, you don't lose, and that's the key. Now, we've had a pretty good bottom, on those bonds and notes. They stopped right at that 76% level. At the 152 level, we had about a one-handle rally because of the news that was out this morning. And whether that's going to keep it at that level or not, with the Fed in there today, folks, anything can happen, and it usually does. So be very, very careful as you're watching these things, unfold. Now, we'll take a look here at the euro, because we looked at that euro yesterday at the 117.42 level. It went down there. It went about 25 pips against us, and then it's turned and started to work. This is the daily in the euro, but what I wanted to do was to show you this morning, what was happening with this, because we had another really nice Gartley form this morning right before the report came out, and it gave a little bit of a rally, but there's a lot of resistance up there at that 117.75. If we clear that, if we get above the 117.75 in the euro, that is going to be a very positive sign, just from, looking at it from a technical perspective. But that's what it has to do. Actually, you need to get about 175.80. That would be, we're trading around 175.60, I believe, right now. And that would give us a pretty good, 175.50, whatever it is. 117.56. So we need to get it above that 117.80 level, up about another 25, 30 pips, and then it's got a pretty good chance, to move higher. We've got the stocks moving up a little bit this morning. We've got the Dow up, we've got the S&P up, we got the NASDAQ up. So it looks like we're going to be making another new high today sometime. So we'll see what's going on. I've had several emails regarding the work that Norm did on his day of the December 11th and 12th. That's passed, so nothing really happened. And that happens in astrology. You find something you think is going to work, and it doesn't. And what do? You move on to the next train, because it's always coming down the tracks. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we were chatting here in the Tiger Den this morning about, making bad trades or being wrong on a trade. That if you're gonna be trading, folks, you have to prepare yourself to be wrong a lot, because that's what it's all about. No one's going to be 100%, and you have to figure out when you're wrong. That usually the difference between a neophyte trader, the beginner, and the professional is the professional will recognize the fact that the trade has gone bad faster than the neophyte, and he does something about it. But losses are like breathing. You got to have them in this business. I mean, it's just a question. What you don't like to have is when they come in spurts where you might have 5, 6, or 7 in a row, and it really shakes your confidence. But you just have to get back into the game. Those of you that play golf are halfway decent. Just think of Tiger Woods. He doesn't throw his clubs into the water. He just goes on to the next hole. So that's really what you have to do. He left the game a couple of years ago, and now he's running at about 100th or whatever he is. I don't know where his ranking is now, but he left really close to number 1, and now there's a whole bunch of young fellows in there that they've got their place in line, and they're not going to give it up very easy. So he's going to have to fight his way back, and the way he does that is to try to make less mistakes than the other person, and that's really what it's all about. It's a game of how much money you lose, not how much money you win. That's the real key to that. Today's the first day of Hanukkah, starting the Christmas season. So the next few weeks we're going to start to see a drop off in volume more and more, which means the volatility can even can even do that. It's basically the volume could make the volatility even greater. So we're having some pretty big, volatility. Of course, we've got enough news in the world to, make the things go up and down anyway, but that's neither here nor there. there's a I wanted to share with you one pattern that is going to be real interesting here because we've got this new moon coming up here. Let's try that again. We have the full moon coming up here next Monday, this coming Monday, and I just wanted to bring this chart up for you to take a look at it on the wheat. This is the March wheat, and as you can see here, we are really close to. We're within about 3 cents of the 1.618 expansion, and we want to be watching that because if that happens to come in on the 18th, which is Monday, that's going to be a very, very positive sign. Yes, they're having a question about the Australian dollar. That was one that we really liked. As you remember, early this week, it was completing a beautiful pattern down there at the 75 level. The low was a 75.03, and now we're trading above 76 now. So here again, there's a situation where the market has moved in your favor. Your risk on that was originally 40 pips, and now you've made 2.5 times that. So you either have a choice of taking part of it off here, and then you could put your stop at the break-even point, or raise it to where you only, you back out of with a 40 pip profit. But you certainly don't want that thing to go to a loss now. And the reason why is you've made 1,000. That even though you haven't taken the profit yet, that's in your account. That's part of your net equity, and you don't want to give it back. So that's really what you're looking at. But believe me, we have the Fed today, so those things go out the window when the Fed's out there. And the reason why is liquidity is really, really bad right as the Fed is making the announcement. And that is why nobody likes to stand in front of the what's happening, and that makes liquidity less. But 10 or 15 minutes after, then liquidity is going to be doing pretty good. So just keep an eye on that. That's what it looks like from the cheap seats out here in Tucson, Arizona. So we want to watch that one very, very closely. Just always remember, folks, keep in mind it's not about how much money you're risking. It's not about how much money you're trying to make. It's about how much money do you have at risk anytime. Because you will, like the blind hog, you will find an acorn here and there to feed yourself, but you got to be able to look at it. Yes, Marshall, we are watching corn the same way because we've got a 3 drive on the daily. That's one of the things that we will be covering in the newsletter this weekend is the corn, and also the wheat. Both of those will be interesting, especially with the full moon that we have coming in. Yes, it's March wheat that we're looking at, Mike. That's the main one that we're looking at. So we're within about 3 cents, but here again, there's the time that we're looking at as a possibility. We should be looking at time coming in right around that full moon on the 18th, which would be pretty good interest, pretty good. And of course, the lunar cycle is one of the ones that we like the best. And even though they don't work all the time like anything else, but they do give you a little bit of an edge when they match up with the patterns, that we're watching. So those are one of the ones. As far as the interest rates, the bias is certainly to the downside. It looks, they say it's about 95% that the Fed is going to raise rates by a 1/4 point. This is her last meeting, of course. She'll be leaving in January. I mean, they can do whatever they like, but my guess is if they don't do it, the market will go down. If they do it, the market will go down, because this is a bearish pattern that we have here in the notes and bonds. However, the market is very oversold, and we could get one heck of a rally in that. So that's see what you're looking at. But I on the wheat, I think you just wait until Monday just to see what it's at. You're in a strong downtrend. You're 3 cents away, and if we go much below that, it could go a whole lot lower in the wheat. So you've got to be extremely careful there. And because the number in that March wheat is, I believe, 409, and we're 410 right now, so we could easily get down into that area. So we need to watch this one very, very closely. In just a few minutes, we're going to have Dr. Al Larson in. Al has a double PhD, and he's a really, really nice fellow from Thornton, Colorado, and we'll have him on in just a little bit after we have the break here. we've reached some. We talked about this yesterday, but we've reached some really major points here in some of these metals. Let's just take a look here at the platinum on the long-term move here. You see, we've completed a monster ABCD pattern over the past year in platinum. Remember, the gold and silver are still a lot higher than this, especially the gold, but the platinum has completed that big ABCD as of yesterday down there at that 874 level. I think we're trading around 876 or 77 this morning. But again, this might not move until, and if it does, it might not move until Monday. If we get much below that 860 level in platinum, that's going to be a very, very bad sign as far as a possible bottom in here, because we're right at that 1.618. And as we know that if we go below that, that is not a very good sign. But the pattern is certainly there. And that's it. Yeah, Mr. Z, you're right. Mark's favorite fears were, the fear of being wrong, the fear of losing money, the fear of missing out, and the fear of leaving money on the table. And remember, fear means false evidence appearing real. Stay tuned for Dr. Al Larson of Money Tide.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Dr. Al Larson on the line. Al, are you there?
Yes, I am, Larry.
Hey, happy holidays to you, my friend. I just wanted to make sure that you're ready to go today. I've posted the first chart in here, which is your Stargo chart. You want to explain to the folks what you're looking at here? Al, before you do that, one of the questions that someone has asked is, how did you get started doing this?
Okay, many years ago, I had a mentor who got me interested in research done in the 1930s on the effects of sunspots and solar activity on prices of commodities like wheat, and a gentleman by the name of Stetson and Clayton had done a lot of research, and they'd shown that the planetary system modifies the weather on Earth, and that modified crop yields, growth rates, tree ring cycles, and a great deal of research. So I got interested in tracking the energy from the sun to the Earth and its effect on markets. And I finally figured out it wasn't just the light, it was the entire interplanetary electric field. And that field affects all life on Earth and everything we do. And with a great deal of work, I managed to figure out how much of it appears in markets.
Is this some of the work, that energy stuff that Tesla was working on, 50, 60 years ago? Oh, it's more than that. It's 80 years ago.
Well, Tesla was well aware of many of the phenomena such as resonance. He had a famous experiment. He vibrated an elevator shaft of building and nearly shook the building down. Tesla lacked one piece of information that really curtailed his career, in that at that time there was no understanding that the Earth's atmosphere is a plasma, which is sort of a electrical gas. And his experiments in Colorado Springs, where he tried to take his Tesla coil and blow it up to giant size and broadcast power, kept having a problem that instead of broadcasting power, it kept creating lightning bolts. And that's because the plasma short-circuited, so to speak, the broadcast. And fortunately, now plasma physics are fairly well known, and there's an alternate version of the universe based upon plasma physics, and that shows up in markets.
Mm-hmm. Is this what we're looking at with this Stargo chart?
Okay, the Stargo chart is a long-term forecast. It's actually not a computation. Most of my forecasts are a computation. Stargo is simply an observation of a energy pattern that comes, I believe, from the star background. So it's way out beyond the planets. This Stargo chart that I'm showing you now, everyone's got this question of, where's the top to this bull market? It's been like the Energizer Bunny. Everyone who's tried every Fibonacci retracement saying here's the top has been wrong.
Well, I'm glad it's not happened to me today. Anyway, This is great. Al, keep going.
Now, one thing that I came up with about 4 years ago is vibration levels. And on this chart, I've drawn two sets of lines. These aren't the only vibration levels, but there's some purple ones, and there's some yellow ones. You see the last two bull markets were stopped by the yellow ones, but they only pulled back to the purple ones. Now, there's a fudge factor due to fractal behavior between these vibration levels, but these are key levels. And what I look for is I scale them to a wheel of 360 degrees, and you have to figure out the ratio. And a long-term scale factor is a wheel of 300 or 3,600 points, is a wheel 360, so a 10-to-1 scale. And if you look at that, in 2014 and 2016, we made substantial lows right on the purple vibration level. And that was up 90 degrees from the vibration level back in 2009. What that is telling me is that we are getting near the next purple vibration level, which will be about 2730. And as you know, our good friend Jim Twentyman, I've been saying 2700 was a point I felt might be substantial resistance for the S&P. And Jim, of course, tells me, well, that's the 9 number.
Yeah.
The other thing I'll point out, here's a Fibonacci ratio. 18 years ago, we were peaking in the Y2K phenomena. And if you'll recall, that's when I fell on my roof and...
oh, you almost died. I mean, you broke your ribs and everything. I remember that. It was Christmas. It was Christmas time. You were putting up the lights, wasn't you?
Right.
Yeah.
And now I'm here to tell you I'm born again. I'm 18 years old. Feeling my oats. But at any rate, from that peak until now, it's roughly 18 years, and we're 10 years from the peak in 2007. So that's a 5 to 8 ratio right out of the Fibonacci series. So I think that we are getting close to a major top here. And there are other signs. If you go on to the next chart.
Okay, let me put that up for us here. That's the ES chart, correct?
Yeah.
Okay.
That ES chart, all I want to point out to you is as the end draws near, the slope of the chart tends to get steeper and steeper. And I, of course, look at slope to see what cycles are running. So, okay, I'm still seeing these. There it is. Now, on this ES chart, this is just for this year. And we started out the year with a little rally and a big pullback, and then we started easing up. But I track exponential moving averages. Most of the year until the solar eclipse in August, we were running basically tracking the 110-day exponential moving average. Then we steepened up to the 36, which is a 3-to-1 ratio. And
yeah.
now,
We got to take a break to pay a few bills. Would you stay with us, please? Al Larson from Money Tide.
okay.
We'll be right back. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're talking with Dr. Al Larson from Money Tide out of Colorado. Al, we have a question for one of our listeners. On the eclipse, you were using the 110 exponential moving average. What did you switch to after the eclipse, Al?
Well, after the eclipse, the slope steepened, and it's been tracking a 36-day. And now, more recently, it's steepened again, and it's tracking a 6-day. So what that says is that it's sort of a little power curve running up. So
that's what it's been doing. That's for sure.
That's typically the sign of an impending top. Going to the next slide.
This is the bit. Is this the Bitcoin one, or is it the
Twitter one?
The Twitter one. Oh, I think this is it right here.
Right.
No, that's not it. Where did I do it with it? I only have the Twitter one. I don't have a chart for Twitter, Al. I've got the one on
number 4 TWTR.
No, the one I have for number. No, I don't have that one for Twitter. The one I have for number 4 is your email address and stuff, that where you're giving the free clinic and stuff like that away. But I don't see one for Twitter. I only got 6. So you got 1, 2, 3, 4, 5, 6. Yeah, I have 6 there. Yeah, but I don't see one for Twitter.
Okay.
Could we go to the one on Bitcoin first, because this has got everybody in a tether, and I'd like to get your opinion on it, because there's.
Well, yeah, go to the Bitcoin one.
Okay, there we go.
Okay. I first heard about Bitcoin in 2009, right after it was invented, from my then son-in-law, who is a computer nerd.
Yep.
And he was telling me how he could get rich by running his computer and minting a cryptocurrency.
Oh, dear.
And, I rolled my eyes and wished him luck.
Did he do it, Al?
Well, I don't know what he did. He's no longer my son-in-law, so.
Oh, okay. Well, I'm sorry to hear that.
Story. But Bitcoin, it's now being touted as if it were a stock, and I've heard people talk about its marketable capitalization. Most people do not understand what it is and is not. First of all, Bitcoin, how can it be a currency? There's nothing physical about it. It's not a coin, number one. So calling it a coin is a lie. It is a set of books. You know, like a company has a set of books, and that set of books records everything. Bitcoin is a distributed ledger of who has owned every Bitcoin since the beginning of Bitcoins. And the argument is that the book is the same as the currency. So to call it a currency is also a lie. It is not a currency. It's a set of books. They were created, Bitcoin was created by a gentleman or group of gentlemen, or could be some ladies in there, but they're a secret group of hackers. So, okay. Number one, if you're going to buy something you'd like to know who it's from, you will never know with Bitcoin. Now, the ledger is built in such a way that each line in the ledger, or each block, is encrypted. And there's the opportunity for anyone in the world, after downloading a piece of code, to add a record to that block, to record another transaction in Bitcoins. Now, because of the encryption, they can't go back and change any of the previous blocks, but they have to crack the code of the last block. So this is breaking encryption is the basis for adding Bitcoins. And the people doing this are called miners. It should come as no surprise that most miners are in China. Now, miners, every time they add a transaction, got a transaction fee and a number of Bitcoins. Now, the number of Bitcoins is designed to decline, so it's going to, quote, limit the supply. But when I look at this, it's nothing I'd ever put my money in, because money is something that you hope you can trade for a loaf of bread. When my grocery store takes Bitcoins and gives me a loaf of bread, then I'll get interested. But to me, this is like the dot-com mania. Back in that bull market, I remember seeing a news show of this kid, 14-year-old kid, who had written one web page and was going to be a millionaire. And, you know, I just rolled my eyes and thought, that's surely the sign of the coming bust. Bitcoin is in the news. My wife started talking about Bitcoin. Everyone's talking about Bitcoin. But you have to keep in mind, it is not backed by anything real. A stock price is backed by its earnings. The price or the value of a real currency is backed by faith in the country that supplies it. The U.S. dollar is backed by the productivity of the U.S. Economy. But Bitcoin is backed by nothing. The other thing is, once this computer way of inventing Bitcoins was published and put out, there's no barrier to entry of anyone inventing Bitcoins or, you know, their own cryptocurrency. So crypto does not mean safe, and it's not a real currency. And, you know, all I'd say is that buyer beware. And when I look at this growth curve, Joe Granville said there's no nice way to come off the backside of a power curve.
Well,
now, what I did do is I used my forecasting technology to make a long-range forecast for Bitcoin, and that's this blue line on this chart. Mm-hmm. And it doesn't show the exponential growth because my formulas don't understand mania behavior. Yeah. But it says coming into next year, Bitcoin might be suffering some growth pains there. So yeah. That's all I really want to say about Bitcoin.
There's about, 1,300 cryptocurrencies out there, they say?
I have no idea. It's like, Bitcoin has made people believe that they can print money with their computers. So.
Sure. Wow, it's a little, it's getting into the news, and especially since the exchanges came on. We got the CMEs coming out with their futures on Sunday, so that's going to try to give it a little bit of legitimacy. But I think the warning here is pretty good. Al, could you stay with us till the last break here? I want to let the folks know how they can reach you. We got Al Larson from Money Tide out of Colorado, 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. Al, I did find the Twitter chart, so I posted it up if you wanted to discuss it a little bit. It looks like it's in an uptrend here, or starting one.
Well, yeah, on the Twitter chart, all I'm showing, first of all, it's a long-term forecast. And Twitter's been a very popular stock. It's mentioned thousands of times a day on news, but it's been going down for this whole, or since its IPO. On its 4-year anniversary, I looked one morning, it was up 8%. And so I did a long-term forecast on it and found that, and that's the blue line, and that said that Twitter had come down, and the horizontal lines are vibration levels, it had come up one vibration level. Twitter's a laggard. In the late stages of a bull market, the laggards finally get a little life. And they may even run counter trend during a bear market. So that's all I wanted to show on Twitter.
Okay, now we want to talk a little about if the folks want to reach you, they go to moneytide.com.
Yes, go to moneytide.com, and I give on Thursday nights, tomorrow night, I send out a free weekly email. So if they go to moneytide.com and sign up for the free weekly email, then on Fridays I do a free chaos clinic, and the instructions for joining that are in the weekly email.
Okay, that's great. Anyway, what's your email address, Al?
dr.al.larson@earthlink.net.
Oh, that's great. Well, listen, we want to thank you for being with us. We'll have you on again sometime right after the first year. I want to wish you and Nancy a wonderful holiday, my friend. You're one of the best. Thanks, Al.
Okay.
Dr. Al Larson from Morton, Colorado.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.